Do you want to start investing in stocks but don't know what to buy? Check this video to find out. Good afternoon everybody and welcome to a new video. Today I am going to show you how you can invest in the stock market with little money. This video is divided into 6 sections, which are: why you should invest, what should you invest on, expected return on investment, where to find information about companies, what is important to note, and a summary. Without further ado, let's get started. Number 1. Why should you invest? Do you have money laying on your bank account? These days the interest rate is so low that the bank hardly pays you any interest. Due to inflation, prices rise around 2% each year. This means that everything costs more, but you still have the same amount of money in your bank account. For example, let's say you have $1,000 in your bank account and Apple's Pro stand costs $1,000. Because of interest rate is so low, bank will only pay you $5, but the price of the stand will rise $20. So as you can see, you can't buy as many things anymore, so if your money is just laying on your bank account, it's like throwing money away. Second reason to start investing is that we all have dreams. If you want to achieve financial freedom, you have to start investing. You might also have other goals or dreams that you need money for, but most importantly, life will be much less stressful when you have that 100k invested. Number 2. What should you invest on? There is many different options for you to invest on, like stocks, mutual funds, index funds and exchange traded funds, for example. What you should invest on depends on how much information and time you have for investing. But because this video is for beginners, let's assume that you don't have all that information and time available. Stocks are the ones that you can use your information to make the best profits. However, this means that you have to analyze tens of companies, which take hours or even days, and still you can pick the wrong company. Also, with little money you won't really make big profits even if the price of the stock doubles. So, what is best for those that are just starting and don't have time to analyze? The answer is index funds. Index funds invest in many companies at the market, like S&P 500 invests for top 500 stocks in the US. That way your money goes to 500 different companies, so if one company goes down, you won't become broke. Another great thing about index funds is that many investment sites offer them without any fees, and there is no minimum investments required. This means that you don't spend any money on useless fees that the banker uses to buy coffee, and also it means that you can start with just couple dollars. Number 3. Return on investment. Return on investment depends on how much risk there is and how long the investment time is. Time especially plays a big role here. Warren Buffett made over 99% of his wealth after the age of 50. This is because of compound interest. Click on the upper right corner if you want to find out more. Because of compound interest, you should buy those index funds that automatically reinvest profits. That way they'll grow interest on interest, which makes a lot of money in the long run. Here we have a chart for S&P 500. As you can see, some years you make profits and some years you lose money. However, the average annual return from 1926 to 2018 is around 10%. Number 4. Where to find information. There is many different websites that provide information for stocks. For example, Yahoo is very easy to use. In the front page you can see S&P 500 for example. You can also easily just search the company or the fund that you're looking for and see a lot of information about them. If you want to invest in stocks, always try to find out news about the company and check their web pages for more information. Number 5. What is important to note? There is a few things that you should pay attention to when you are investing. One is that you should always try to minimize the costs. Like I mentioned earlier, you can invest cost-free for many index funds. One principle I have is to never pay more than 1% of the investment on costs. Other things you should pay attention to are diversification for industry, time and the location of the company. You should also make an investing plan. Never invest with your emotions, just stick to the plan. If the price is going down, you probably want to sell it immediately, but don't do that, just follow the plan. Number 6. Summary. Always invest your money. Laying money on your bank account is like throwing it away due to inflation. If you don't have time or enough knowledge, invest on index funds because they are cost efficient and diversified and you don't have to research for days. Profits depend on risk. Annual return for S&P 500 is 10%. Use helpful websites to find more information about the stock market. Always try to minimize the costs. Diversify so you don't lose everything if one business goes down. Also diversify for time. For example, you can automatically save for index funds every month. And lastly, make an investment plan. Never invest with your emotions. Thank you for watching this video about investing. Comment down below what are your favorite stocks or index funds. Also, check out my latest video if you want to know how Warren Buffett became a multi-billionaire through the compound interest. You can also click here if you are interested how you can save more money to invest. Here is 10 easy tips to follow to save thousands every year. Feel free to subscribe if you are interested in achieving financial freedom. Have a great day and I'll see you in the next video.